Edmonton housing market update for January 2023. Here we go. We're using the most recent statistics available from the Realtors Association of Edmonton. So that's the month of December. We're now partway or halfway through January, so I'm also going to be giving you my insights on what I've been seeing so far in January, although we'll mostly be relying on the December stats. We're going to start with looking at the market as a whole, then the single family home market, and then the condominium market. I'm also going to look at benchmark prices, which is one of the best indicators we have available for seeing how prices are changing in the market, and that'll be at the end of the video. So let's dive right in. So looking at the market as a whole, the listing absorption rate was sitting at 18.02%, which still puts us pretty much right in the middle of a buyer's market. That stayed relatively stable from last month when we were sitting at 18.22. So you could say there's a slight dip there, but considering that we were in December, which should be one of the slowest months of the year, that's actually pretty good that it remained stable. I know December was busy for me and a lot of other agents, so the market definitely felt pretty robust. With that said, it is still a buyer's market based on the market as a whole, but there's certain segments where that's not necessarily the case, which you can always find out by giving me a call. Anyway, so looking at the average price for December, it was sitting at $350,466, which was down 4.18% from last month and down 7.51% from December of last year. Now, if you look at the average price trend, you'll see, obviously looking at the last 12 months, that we had our biggest gain in February of last year. Then it was kind of flat for a while, had a few months where it dropped. August, we had a big drop in the average price of 7.22%. Then it creeped up a little bit in September and October, took another 2.68% drop in November, and now a 4.18% drop in December. Now, although it is important to look at average price, I wouldn't really give it that much weight. I'd give the benchmark price a lot more weight, which we'll get to at the end of the video. The average price can be manipulated by a lot of higher priced properties selling or a lot of lower priced properties selling. And since the interest rates have gone up so much, a lot of people got forced into buying lower priced properties, and that would automatically bring the average price down. So I do think that the average price is a little bit skewed for that reason. It can still overall kind of show you the health of the market and where prices are like generally going, but I don't like it too much for evaluating how your property might have changed in value. Now, if we look at the average price trend for the year, 2022 ended being up 0.19% from 2021. So we did end up being in the positive for the year, just barely. We had lost most of the gains that we had gotten earlier in the year, in the second half of the year. Now, if you compare that to 2021, the average price was up 6.81%, which was a pretty significant gain for Edmonton. And it edged out 2022 by quite a bit. Now, looking over at the active and solds, there was 3,952 active listings at the end of December and 712 sales. The number of active listings was down 20.45% from November and up 5.81% from December of last year. So the inventory dropped going from November to December, but it's actually up a little bit compared to where we were sitting at the exact same time last year. I definitely noticed the drop in inventory, and that was starting to shift how the market felt a little bit as inventory numbers dwindled coming into the end of the year. Now, that is pretty normal. A lot of people take their properties off the market as we get in December. They want to, take time off for the holidays, and they think about relisting sometime in the new year. So it is normal to end up with less listings at the end of the month. But there was definitely some serious buyers out there. As we said, there were 712 sales, and even though that was down 21% from last month, it still felt significant considering the market forces at play here. And that number was also down 26.22% from December of 2021. So still a fair amount less sales than what we saw at this time last year. If you look over at the 12-month history here, this basically shows you the balance of the market. The bigger the green bar, the more of a buyer's market it is, the more breathing room there is for buyers. As you can see, it really ramped up last year from January, February, and March, and then took a steep decline going into April and May and just kind of kept going. And it's stayed relatively level since about August in terms of the balance of the market. Like, yes, the inventory levels have adjusted and so have the sales volumes, but they've been kind of staying neck and neck where there hasn't been a huge shift in the balance of the market. I don't think we'll quite have the same thing happen this year, like we are midway through January now, but I don't think we're going to quite see what happened last year going into February and March. But it is a possibility that if we don't have a lot of new listings come on the market, that the market could get tighter for buyers. So I know there's a lot of buyers on the fence right now. They're not sure if they should get in now or wait to see if prices come down more or if more options become available. But I wouldn't be shocked to see, especially in certain segments for newer properties, brand new homes, anything built after the year 2000, detached homes, definitely seems like it's a bit more competitive there for buyers with not quite as much to choose from. And those are also the ones that do tend to sell easier for sellers as well. So let's keep going. The average days on market was sitting at 60 days compared to 53 days in November. Again, not a huge surprise. It's that time of year. It was sitting at 54 days in December of last year, so a little bit slower than last year. And the market distribution, this is the price point that actual transactions are happening at. Just under 17% was under that $200,000 mark, 15.7% between the $200,000 and $300,000 mark, and 24.2% between $300,000 and $400,000. So that was the biggest market segment if you look at it overall for both single family and condos. And then the next segment, sitting at just over 20%, was between $400,000 and $500,000. We had 10.7% between $500,000 and $600,000, and 5.88% between $600,000 and $700,000. After that, just below 3% between $700,000 and $800,000, and now we're starting to get into less than 2% or just under 1.5% between $800,000 and $900,000. After that, it gets much smaller because you're getting into a lot more expensive properties. So that's it for the market as a whole. We're going to look at single family homes next, but I wanted to give you an opportunity if you're looking at buying or selling a home in the Edmonton or surrounding community, then you should definitely give me a call. You can reach me at 780-819-5508. Again, that's 780-819-5508. I am a realtor here in Edmonton, and I can help you find a home, negotiate a good deal, and I recommend setting up a free consultation with me. So you can either text me or call me at that number, or you can go to booktrevornow.com, select the time on my calendar, and then I'll call you at that time. It's completely free. There's no obligation. So if you decide you don't want to work with me afterwards, or if you're still quite a ways away from being ready to purchase, that's totally okay. I just want to see how I can help you, connect you with any resources that would be helpful for you in your search, or maybe it's getting pre-approved for a mortgage. I can help you with all those things. I guarantee that you'll definitely learn a lot talking to me in those 30 minutes. You can ask me anything you want. The time is yours to get the information that you need to help you on your journey. So recommend going to booktrevornow.com, select the time on my calendar, and then I will call you. Okay, so let's look at the single family home market. So single family home market was sitting at a listing absorption rate of 14.82%, which again, right in the middle of a buyer's market. And here's the 12 or 13 month history. Again, it stayed relatively stable. It did dip a little bit from November, but I'm not surprised just because it was December. And there's a lot less going on in December. And again, based on what I was telling you before, you can see the same trend from last year, that it really picked up in February and March. There's no green bar there because there was a lot of sales happening and not nearly as much inventory as there was later in the year. The average price for single family homes was sitting at $460,226, which was up 0.14% from November and down 2.4% from December of last year. Here's the average price trend again. It's basically follows the same trend as what I talked about for the market as a whole. We had an 11.24% gain in February of last year. Went up a couple more times in March and April, then it was down in May, up a little bit in June, up a little bit in July, down significantly in August, and then it was down a little bit more, but we happened to get a gain in December. It's a bit of a roller coaster with the average price. As I said, it's very affected by what price point properties are selling at, if there happens to be more expensive properties selling or cheaper properties selling essentially. So we'll look at the benchmark prices for single family homes later on. But here is the average price trend for the year. 2022 for detached homes or single family homes ended up being 3.51% gain. So it did do better as a market as a whole, but not quite as good as it did last year in 2021 when it was up 7.65%. Now, if we look at the active and sold listings, there was 2,476 active listings at the end of the month and 367 sales. So the actives were down 20.44% from last month, but up 25.43% from December of last year. And the solds were down 25.56% from last month and down 33.99% from December of last year. So you can see that we basically have about a third less transactions than we did this time last year. That's definitely something some agents will be feeling if they're not as busy. But of course, every agent is in a different situation in their business and how they market themselves. So there's a smaller pie, if you will, in terms of how many transactions are happening. And if you're looking to buy or sell your house, a lot of times people think just because the market's not as good as it was at another time that nobody's buying or nobody's selling. But the reality is there's still transactions that are happening. It's just not at the same intensity. So 30% less transactions might hurt some of the agents out there that aren't doing as much business. But if you're looking to sell your house, don't get the idea that nobody's buying houses, because I was very busy in December, had a lot of deals that we were getting put together. There are serious buyers out there. So try not to take a general assumption like that about the market. Okay, so looking at the average days on market, we were sitting at 55 days, which was up a little bit from November, which was at 51 days, and also up from December of last year when it was at 48 days. And here looking at the market distribution for single family homes, 1.4% of the market was under 200,000. So obviously if you're looking at getting into the single family home market, it's very unlikely to happen under 200,000. Between 200,000 and 300,000, it was just under 8% of the market, and 24.59% of the market was between 300,000 and 400,000. So that's a significant portion of the market. I can tell you from a lot of the conversations I'm having with buyers, there's a lot of people that would love to buy a single family home around that 350 range or under 350 or definitely under 4. But the biggest segment is between 400,000 and 500,000, which was 28.17% of the market. So that's where the most of the action is, but there's still quite a bit of action between 300,000 and 400,000, and also between 500,000 and 600,000, we've got 17.53% of the market, which is definitely significant. Nothing to scoff at, but not as big of a segment as between 4 and 5 or between 3 and 4. Then there's about 9.68% between 600,000 and 700,000, and 4.81% between 700,000 and 800,000. So you can see once you get into that, 600,000 to 700,000, you're less than 10% of the market, and you're less than 5% of the market if you're looking between 700,000 and 800,000. Then it's 2.49% between 800,000 and 900,000, and 1.19% between 900,000 and $1 million. After that, there's actually a bigger segment between 1 million and 1.5 million, which is it's a $500,000 spread, so it's not that surprising, at 1.51% of the market, and then it's less than 1% for every segment after that. Okay, so that's it for the single family home market. I'm going to jump into the condo market, but I did want to let you know that I've got a Facebook group that you can join where I post updates on what's going on in the Edmonton housing market. So if you go to edmontonhousingmarket.ca, you can put in your email address, and that will allow you to join the group. I'll send you an email with an invite link to join the group. You can ask me any questions you have about the market in there, but I'll also be posting weekly updates as well as links to my latest YouTube videos. So you can go to edmontonhousingmarket.ca to check that out. All right, so let's take a look at the condo market. So the condo market in Edmonton, probably no surprise, it's still a buyer's market with an absorption rate of 17.68%. That's been, again, actually doing a little bit better than November in terms of the absorption rate, but it's been pretty flat since July for the condo market. If you look at the 13-month history here, I've said this many times, but the condo market started doing a little better last year in February, March, and April. Then it started to lose its momentum and kind of go back to what felt like normal, but it was still a little bit more balanced than it was before. Because if you look at December of last year, it was sitting at 13.49, and January was sitting at 14.86. So if we're sitting at a 17.68% absorption rate, it's still actually in a better place than it was last year in terms of the actual balance of the market. It still has a long way to go until it's balanced for sellers out there of condos, but it hasn't been deteriorating in terms of the balance. Now, the average price for condos was sitting at $197,339, which was down 7.75% from November and down 2.19% from December of last year. So that actually is a significant drop from last November or from the month before. But again, that's just a perfect example of what happens with average prices. It can be really skewed if you have some more expensive condos selling versus a bunch of older one-bedroom apartments kind of thing. So I would really take the average price with a grain of salt. If you look at it for the year, it's a little bit better. It shows that the average price was down 1.04% for the year versus being up 3.9% last year. Now looking at the actives and solds, there was 1,476 active listings and 261 sales. So the active listings were down 20.47% from last month and down 25.72% from December of last year. So from a seller's perspective, there being less inventory would be a good thing. You're gonna have a little less competition, but from a buyer's perspective, the more the merrier usually. In terms of sales, there was 261 sales, which was down 13.58% from last month and down 2.61% from December of last year. So very interesting. There hasn't been as big of a drop in the terms of sales volume for condos as there was for single family homes. So even though that market hasn't been performing great, it is interesting to see that it didn't seem to take as much of a hit from the market shift. You could speculate that it's because condos are less expensive. So if people are buying condos, maybe they're not purchasing at the top of their pre-approval amount. Like let's say they get pre-approved for $400,000, but they decide to be a little bit more conservative and they buy a condo for $200,000 or $250,000. If their pre-approval amount went down because interest rates went up, they still have enough room to buy the same price condo. Whereas if somebody was buying a single family home, they're more likely to be going closer to the max limit on their pre-approval amount. So as soon as that comes down from interest rates going up, that would actually start to push them into a lower price bracket or potentially take them out of the market altogether. So that's just sort of speculating on what could be causing the condo market not to have reacted as much to the interest rate increases as the single family home market. I know there's people out there that think that we'll reach this tipping point eventually, and I'm in that bucket too. If I do see it's possible that we could reach a tipping point where if it gets too unaffordable for people to go into single family home market, that we'll start to see an uptick in condo sales. Haven't seen it yet. It's just been more resilient so far. So that's how I would kind of describe it. Obviously, there's a lot more to it than that. If you're curious what's going on in the condo market, I'd recommend reaching out to me. You can reach me at 780-819-5508, or you can email me at trevor@trevortardif.com. Be happy to take a look at your situation or your condo or whatever it is and give you a little bit more specific guidance on what I see happening in that segment of the condo market. Okay, so let's take a look at average days on market, sitting at 71 days in December, which was up a lot from November when it was at 58 days, and it was at 67 days in December of last year. Now the condo market distribution is much different than single family homes. You can see the majority of the market's under 200,000 with 48.46% of the market under 200,000. That also seems like more than usual. I'd have to go back and look at the previous video, but that could also explain the significant drop in the average price if there happen to be a lot of people buying under 200,000 in that month. Between 200,000 and 300,000, there was 32.38% of the market and 13.78% of the market between 300,000 and 400,000, and then 3.28 between 400,000 and 500,000. After that, you got less than 1% of the market in each price segment. Okay, so that's it for the main report. Now I wanted to get into the benchmark prices. This is probably one of the most accurate models that we have access to for the change in home values. And the benchmark price for the market as a whole in the city of Edmonton was sitting at $365,000 for the month of December, which is actually up 0.4% for the month, but down 1.3% for the year. Now, if you look over at this chart over here on the right, you can see how the benchmark price has fared over the last year. You can see that we are down from last year, that we're down that 1.3%. You can see us over here, but we kind of bounced there. So does that mean that November was the low? I don't know. Maybe. I can tell you that December definitely felt like there was some oomph going on to it with buyers. There were a fair number of serious buyers for that time of year. Maybe the market is shifting. I know there was a lot of buyers on the fence at early fall because everybody was expecting more interest rate increases. They wanted to see how that played out in the market. But depending on how many of those buyers decide to get off the fence and buy now that we're in the new year, that could really affect the balance of the market. So I don't know exactly how it's going to play out. If you're one of the people that have talked to me, I tell people I've got multiple scenarios in my mind on how I see the market unfolding this year. I'm keeping an open mind. That's one way of saying I'm not like super confident it's going to go one way or the other. I could definitely see a scenario where it's more in the buyer's favor or a scenario where it's more in the seller's favor. And it just depends how big that group of on the fence buyers is, and also how big that group of sellers that weren't happy at the end of last year, decided not to list, or they took their property off the market and now they're hoping it's better this year. So if we end up with a much bigger group of sellers this year than that group of buyers that enter the market, then it's going to definitely be in the buyer's favor as we get into the spring market. But if it's the other way around, it could be in the seller's favor again, or at least a more balanced market that would not necessarily mean there would be any significant price reductions. So something to keep in mind. It's definitely hard to call it. As we get into the spring market, I'll be looking at the stats and I'll be doing my updates to let people know what I'm seeing. Last year, I saw it pretty early in February, how the market was getting really tight for buyers, and I could tell it was going to get tight and prices were going to go up. I'll be keeping an eye on it and letting people know as that goes. So make sure you like and subscribe, and you'll get those updates, or you can always reach out to me directly if you want to get the goodies as it's happening. But let's look, I just almost forgot, we still have a few more benchmark prices here to look at. So I gave you the benchmark price for the whole market. Now let's look at single family homes. The benchmark price for single family homes was sitting at $429,000 for the month, which was up 0.6% from last month, but down 0.6% from last year. Not a huge swing there. Apartments sitting at $171,000, which was up 0.6% from last month and down 4% from last year. And then townhouses were sitting at $218,000, which was up 0.5% from last month and down 2.9% from last year. So based on this, you could see that single family homes have performed the best this year in terms of they didn't take as big of a loss, down 0.6 versus 4% for apartments and 2.9% for townhouses. But all three of them are showing a slight uptake in the benchmark price in December. Now, obviously, it takes time to see, okay, is it going to keep trending that way, or is it going to bounce down again or stay flat? We'll see at the end of January when we get into February which way it's starting to go. But I can tell you it's definitely busy out there. There are people buying homes. There's more people getting into the market. It's not a bad time to sell. Like I said, there's serious buyers out there. So if you're thinking about putting your home on the market, it's not necessarily a bad time to get on. If you get on now, you've at least got the whole spring market in front of you. So if there's any mistakes or if there's surprises and it's not as easy to sell your house as you might have thought, at least you have time to react and adjust your strategy, try some different marketing, maybe try a different price, and have time to get that big chunk of buyers that's going to come through in the spring market. Versus if you wait till later, if you don't get it quite right at the beginning, now you're in a situation where you're kind of reacting and trying to play catch up to the market, and you might have already missed the big group of buyers. Last year, we got really busy in February for buyers. Like I said, I don't think it's going to be quite as intense this year, but I definitely think there are some serious buyers out there. So hopefully that was helpful. I know I gave a lot more context this time, and if it didn't make sense, feel free to reach out to me and we can talk about it more. And like and subscribe. If you click over here, you can subscribe, and if you click over here, you can watch another video. All right, thanks so much for watching, and I'll see you on the next one.